Okay, I will be explaining question 1 first. Okay, so we started the year on 1st Jan 2018. Okay, these are actually the beginning balances, also known as balance brought down. Okay, so this is the balance brought down, okay, for all these accounts. Okay, for ordinary share, cap and retained earnings, okay, these are actually equity accounts. Okay, and therefore, okay, they are actually credit in nature. Okay, for dividends payable, this is a liability. Okay, that's why my balance brought down is also a credit in nature. Okay, during the year ended, okay, I issued ordinary shares 100,000 shares of 50 cents each. Okay, my journal entry in this case is debit cash at bank because I will get cash from my shareholders. Credit issued share capital. Okay, both will increase. And during the year, they also make payment by check, okay, for a dividend which was declared in the previous year. Okay, this means that in the previous year, they declared these dividends of 15,000. They haven't paid yet. That's why in this year, 2018, they are paying for these dividends. Okay, hence, my dividends payable will go down because this was owing in the previous period. Okay, and now they paid it, so my cash at bank also goes down. Okay, finally, they declared the final dividend relating to the financial year ended 31st December 2018. Okay, this is for this year. The question did not mention that they have paid this dividend. Okay, hence, we assume that the business or the company still owe dividend. Alright, because they declared but they have not paid yet. That's why they still owe the dividend. Dividends payable will go up by 24,000. Dividends also go up by 24,000. Okay, at the end of the period, okay, remember, I have to transfer dividends to retained earnings. Okay, therefore, transfer to retained earnings. Okay, therefore, my dividends retained earnings will go down because dividends reduce retained earnings. Okay, and my dividends also goes down because I transfer to retained earnings. Okay, this happens on the last day of the year. Okay, and they also give us that the profit for the year is 37,000. I know that profit increased retained earnings because retained earnings is the amount of profits accumulated over the years, okay, minus dividends. Okay, therefore, whenever I have profit, okay, my retained earnings, which is the total profit that I got over the years, goes up. Okay, if I look at the answer, okay, remember I started the year with $15,000 credit. Okay, this is the balance brought down, $15,000 credit. Okay, during the year, they paid the dividends that was declared in the previous year. So look at here. Okay, the dividends payable actually went down by 15,000. Okay, and in the year itself, they declared dividends again of 24,000. Haven't paid yet, that's why it's a dividends payable. Okay, just bring down the balance to the next period. Okay, for retained earnings, it's an equity account. Okay, therefore, my beginning balance is a credit. During the year itself, earn a profit of 37,000. Okay, the account name is called profit and loss. Many of you actually wrote profit for the year as the account name, but remember, linked to your income and expenses account, okay, we always transfer to profit and loss at the end of the year. Okay, so the account name is actually called profit and loss. If you want to talk about profit, okay, you can bracket and say that, oh, this is a profit. That's why I increase retained earnings. Okay, and also at the end of the year, okay, we transfer dividends to retained earnings. That's why retained earnings goes down. Opposite account is dividends. Okay, finally, just bring down to the next period. Okay, extra of balance sheet. There are two things that I'm looking out for. The first one is actually the heading, shareholders' equity. Okay, and my current liabilities. For shareholders' equity, okay, I need to see the term issued share capital. Okay, you must tell me how many shares are there. Okay, initially, I have 500,000 shares. This is at the start. Okay, then I increase by 100,000 shares because I issue new shares. Therefore, my total number of shares now is 600,000. Okay, which is 500,000 plus 100,000. Okay, and these shares are worth 300,000. Okay, 250,000 plus 50,000. Okay, and during the year itself, I also have retained earnings. My retained earnings amount can be taken from here. This is the balance as at 31st December 2018. Okay, so 76,000. Okay, there's a current liability of 24,000 because if you look at the question, I haven't paid these dividends of 24,000. Okay, there is still a dividend payable as at this year end. Okay, and I have to include this in my current liabilities because they still owe these dividends of 24,000.